Welcome back to The Income Generation. I'm Jeff Small, and I'm here with my co-host David Scranton and our very good friend and repeat guest, Harry Dent. Harry, we know that recently the Fed Chair, Jerome Powell, said the current path is unsustainable, but I never thought in a million years I'd hear you agree with Jim Cramer and say, buy this market. So tell us why you feel that way.
Well, no, I'm more like, you just kind of have to stick with it and be quick to get out because, what I do in my newsletter very seriously is I tell my subscribers when we are at a point where we could be peaking so people can kind of get prepared to move. And we are at one of those points. What I would be looking for here is the first sign that this thing may not get to 4,700, that high target, or maybe ending is that we break the trend line, the bottom trend line from the COVID low in March of last year. That hits about 4,000 on the S&P, so about 5% down from here. So if we break that, that's a wedge that's rising, and that would say, okay, we're at least likely to go into a correction. And then that correction, if it goes low enough, could turn into a top. So that's all I'm looking at. So I would be getting cautious if that happens. If that doesn't happen, then the trend is your friend at this thing. Literally the long-term resistance, the only resistance to this market that I can find from all the best charts is that 4740 target later this year, and that could be hit as early as late June. Let's say we have a minor correction here, like down to 4,000. If we turn back up and break the new highs after that, I would say, yeah, 4740 is a good target into June or July, something like that. And if it hits that, that's when I think the smart money will see the same thing I'm saying and say, okay, this is enough.